2,300 ETFs trading on the US stock market. Today we're going to walk you through 5 of the best ones you should consider holding long-term to build wealth on your financial journey. ETFs are often viewed as a great investment type since they often have pretty low fees. They also don't require minimum investments like many index funds, and they often have a strong track record of historical returns. The first ETF that you should consider holding long-term is VTI. VTI is Vanguard's total stock market ETF and is basically the identical twin of their VTSAX index fund, which is famous for being incredibly popular in the investing and FIRE community. VTI tracks the total US stock market and is comprised of 3,500 individual stocks, so you know you're pretty diversified with this holding. It has an expense ratio of 0.03%, which is incredibly low, and has returned an average of 14% over the last 10 years. Given this tracks the total US stock market, which has averaged an annual growth of 9.87% over the last 30 years, this ETF is a pretty safe bet for growth. It also provides a dividend of about 1.26%, which when reinvested can really help grow your investments. The second ETF you should consider holding long-term is SCHV. This is Charles Schwab's large cap growth ETF, which tracks the Dow Jones US large cap growth total stock market index. Wow, that was a mouthful. Anyways, this index is comprised of around 200 large companies that have shown stable growth and are expected to continue to grow in the future. The expense ratio here is also low, hovering around 0.04%, which means that the fees won't eat into your profits when you hold this investment long term. Over the last 10 years, SCHV has grown about 14% annually and pays a dividend of a little over 1%, which is always nice. The third ETF that is great for holding long-term is Vanguard's Russell 1000 Growth ETF. This fund tracks the Russell 1000, which is one of the newer major indexes out there. The Russell 1000 was created in 1984, and while it has less of a historical track record, it's actually made up of many of the same companies of the S&P 500. It still grants you exposure to a wide variety of industries, which is great for diversification, with a major difference being the Russell 1000 includes a few more mid-sized companies in its portfolio. This does add slightly more risk to the index, but also has the potential for slightly higher rewards as well. Vanguard's fund VONG tracks this and historically returned 18% since its inception in 2010. It carries an expense ratio of 0.08%, which is slightly higher than the other funds we've mentioned so far, but still on the low end when it comes to fees. The fourth ETF you should consider holding on to forever is Vanguard's High Dividend Yield ETF, which operates under the ticker VYM. This ETF is comprised of over 400 companies that pay some of the highest dividends out there. The way this fund is set up, you'll receive 4 dividend payments each year, with the dividend percentage you receive being around 2.7%. What this means is if you held this ETF for 1 year, for each $100 you had in this ETF, you would receive $2.70 in dividend payments, which is in addition to how much the stocks go up outside of that. These dividend payments can really add up, and with an expense ratio of 0.06%, VYG gives you some great diversification and dividend returns for a very low fee. The fifth ETF you should hold on to forever is VOO. VOO tracks the S&P 500, which is comprised of the 500 largest publicly traded companies in the United States. Because of its diversified holdings and the historical ability of large companies to weather market turbulence, the S&P 500 has a great track record and carries less risk than many other investments. While there are lots of index funds that track the S&P 500, I chose to include VOO because it carries a minimal fee of less than 0.03%, which is 1/3 the cost of the most popular S&P 500 index fund called SPY. Because 0.03% is just about as low as you can possibly go in the fee world, This means you get to keep more of your profits, which is always important when you're thinking long-term. So those are the 5 ETFs that will set you up for success if you hold them long-term. Please let me know in the comments below if I missed any ETFs that you are holding long-term. I would love to hear from you. And as always, if you found this video useful, please consider liking the video and subscribing to the channel to see more content in the future. Thank you all so much for watching. I hope you're having a great day, and I'll see you all in the next one. Bye.